Welcome and thank you for joining me for this installment of You Don't Need a Business Plan to Secure a Financing Solution for Your Business, brought to you by Constructum Online Learning. In this video, I look at case study 5, Commercial Property Finance. ECE Civils is an established and growing business with a 10-year track record. In this case study, I consider how ECE Civils can prepare for an application for commercial property finance. ECE Civils currently rent premises from a landlord, but the directors of the business wants to secure their own commercial property with a view of growing the business's asset base. What is commercial property finance and how can ECE Civils best prepare for an application for commercial property finance? But before we start, please remember Principle 3. Answer the 4 questions. Consider watching Principle 3 in Section 1 together with the other principles before you watch the case studies. This will give you a good basic understanding of the principles of financing. When preparing for an application for finance, you must answer all 4 of the questions and substantiate your answers with supporting documentations. We will get to that in more detail in a few minutes. What is included under commercial property? Commercial properties like an office building, industrial space like a warehouse or factory, agricultural properties including farms and certain small holdings, and retail space for shops and restaurants. The directors of ECE Civils seek to accommodate their staff in a suitable office space. A property broker presented 2 options: a residential property that may be altered to accommodate the staff, and a full title office building. Option 1, a residential property. Alterations may be made to create suitable office space with the necessary amenities. The property is an quiet, leafy suburb with easy access to major routes. The directors of ECE Civils like the idea of working in a suburban environment away from the hustle and bustle of the city centre. The property is currently occupied by a friendly retired couple who wants to relocate to the coast. The asking price for the property is 3.5 million rand. Does this fall within the scope of commercial property finance? Nope, it does not. Financiers will not provide commercial property finance for a residential property even if the property will be used for commercial purposes. How can the directors of ECE Civils secure finance for this particular property? The directors may secure residential property finance, a home loan, provided that their respective personal incomes allow them to qualify for the loan. Did you catch that? Whose income is used to qualify for the loan? The income of the respective directors. Also, financiers are resistant to allow a residential property to be registered in the name of a trading entity. ECE Civils is a going concern, a trading entity. Banks argue that residential property finance is not designed to provide for commercial financing needs. ECE Civils are therefore unlikely to be allowed to register the property in the name of the business. The director's stated objective is to acquire the property in part to grow the asset base of the business. Also, the directors will have to ensure that zoning permission is obtained from the local authority to operate a business on the premises. Financiers may include a clause in the home loan agreement that specify that the property may only be used for residential property purposes. ECE Civils may also run into trouble with insuring the property and its contents if the property is zoned for residential purposes but used for commercial purposes. Why then do I include this option for a residential property in a video aimed at commercial property finance? Because this happens all the time. Often, personal services businesses like engineers, architects, accountants, and medical professionals seek finance to buy a residential property for business use. Most people are familiar with the workings of residential property finance. A home loan typically runs over a term of 20 years, sometimes even longer for younger applicants, with finance rates close to the prime lending rate. The resultant monthly debt installment is relatively low. Commercial property finance is a very different kettle of fish. Finance rates are typically higher, and the term over which commercial property loans run seldom exceed 10 years. Consequently, the monthly debt installment is much higher. Another consideration has to do with valuation. Banks will always seek to secure their capital. This relates to question 4 of Principle 3 in Section 1 of You Don't Need a Business Plan to Secure a Financing Solution for Your Business. You may want to watch that video for an understanding. With commercial property finance, the property represents the collateral or security for the loan. The valuation of a commercial property is closely related to the earning potential of the property. This is very different from residential property valuations, where the banks commonly use the latest selling price data from the local deeds office as a proxy to determine the valuation. Option 2, a full title office building. The office building is located on the fringe of the business district. The building is currently occupied by 4 tenants. The directors of ECE Civils consider acquiring this building in part to accommodate their staff, but since the total office space far exceeds the business's needs, this option may also represent a good investment opportunity. The remaining office space may be rented to tenants. The owner of the property claims that he currently receives rental income amounting to 45,000 Rand per month. The asking price for the property amounts to 6 million Rand. Does this fall within the scope of commercial property finance? Certainly, it does. Over the last few years, the directors of ECE Civils invested surplus cash reserves in long-term investments. Currently, ECE Civils has just over 1.1 million Rand invested. This money may be used as a deposit for a loan. Commercial property finance typically run over a term of no more than 10 years at interest rates in the region of prime plus 4 to 6% per annum. Let us calculate the total monthly debt liability. For this, you will need a financial calculator. Purchase price, 6 million Rand, minus a deposit of 1.1 million Rand equals a loan value of 4.9 million Rand over a term of 10 years. At an interest rate of prime 11.75% plus 3%, which equals 14.75% per annum. All of this results in a monthly debt repayment of 77,389 Rand. ECE Civils will therefore have a monthly debt liability of over 77,000 Rand in place of paying a monthly rental to their current landlord of 28,000 Rand as reflected in the cash flow statement. But the current owner of the prospective building claims that he collects rental income amounting to 45,000 Rand per month from the 4 tenants. The directors of ECE Civils believe that if they were to retain 3 of the 4 tenants, that the building will generate rental income of 32,000 Rand per month. From this gross rental income, deduct expenses of owning a building, including maintenance and repairs, insurance, security, and rates and taxes. But who are these tenants? How reliable are they? Can the directors of ECE Civils bank on this rental income? What if one or more of the tenants fail to pay? Will ECE Civils still be able to meet its new debt obligations? For this case study, let us assume that the directors of ECE Civils decide to pursue option 2. Now we can start to answer the 4 questions. Question 1. What do you want and why? ECE Civils wants to own their own property with a view of developing the business into a true asset of value with its own asset base. The business has been able to generate surplus cash reserves from which ECE Civils have invested in long-term investments, as is evidenced in both the balance sheet and the cash flow statements. Question 2. How will you repay the debt? The management of ECE Civils needs to demonstrate that they can generate sales and collect sales revenue, manage cash flow, and generate profits. The most important financial statement to look at is the cash flow statement. If the format of the cash flow statement is unfamiliar to you, you may want to look at the video entitled Principle 6, Your Dashboard, in section 1 of You Don't Need a Business Plan to Secure a Financing Solution for Your Business. Let's now look at the 2023 cash flow statement for ECE Civils. I'll make this nice and big. Stop the video if you like. What do you see? ECE Civils is able to generate sales and collect sales revenue consistently. The managers have a good grip on cash flow management and is able to invest surplus cash reserves for future needs. Furthermore, the business generates consistent operational income. But will the business be able to generate sufficient income to provide for the additional debt liability and costs related to owning a commercial property? For this, we look at the cash flow forecast. Again, I will make this big for you to see. Stop the video if you like. What do you see? First, we see the business realizing its investment in long-term investments to provide for the deposit on the loan. Then, we see the realized funds used as a deposit. And here, we see the new debt liability, together with the increased provisions for utilities and levies, insurance, and maintenance and repairs. The business can still generate consistent operational income and maintain reasonable cash reserves. From all of this, it appears that ECE Civils will be able to service the new debt liability. Question 3. Why should we believe you? The application must support two aspects, namely the financial viability of ECE Civils and the probability of consistent rental income. ECE Civils submit the following in support of their application: financial statements including a balance sheet, income and expenses statement, cash flow statement and forecast, together with business bank account statements reflecting transactions consistent with the information contained in the financial statements. In addition, the directors of ECE Civils meet with the remaining tenants and negotiate new lease agreements contingent on the commercial property loan being granted. The directors also obtain the rental roll from the current owner, reflecting the rental income from the current tenants over the last financial year. The directors of ECE Civils understand the need to insure the property. Financiers typically insist that the lender maintain comprehensive insurance on the property. To make certain that the property complies with building codes and regulations, the managers of ECE Civils engage with a professional property assessor who provides them with a comprehensive report. Question 4. What if you fail? Financiers will always seek to secure their capital. Consequently, the financiers will insist on a covering bond over the property as security for the loan. For a more comprehensive video on commercial property finance, you may want to visit the Constructum online learning channel on YouTube. Thank you for watching. I trust you found the content informative. For more videos like this, please visit the Constructum online learning channel on YouTube. Good luck with your business.